the consumer is still strong. Their balance sheet's in good shape. They're spending 10% more than pre-COVID. They have more in their checking accounts. Companies are in good shape, and that's driving a strong economy. But both in April, October, and today, I'll tell you, there are these things out there which are very uncertain. And when I look at uncertainty, there's always uncertainty. Every day of every life is uncertainty, but it's heightened. And it's heightened because of Russia, Ukraine, oil, energy, food, quantitative tightening. Is it going to be enough to raise rates to 5%? And this is having a huge effect on smaller countries, poor nations, those who are reliant on importing oil and gas. And I think those uncertainties may very well mitigate, and we'll end up with that kind of Goldilocks mild recession, but they may not. So I'm still in the cautious side in this one.
Well, this is still much more positive than you were in October, I think, when you said economic hurricane.
No, I shouldn't have ever used the word hurricane. What I said was there were storm clouds which may mitigate, and people said, oh, he doesn't think it's a big deal. And I said, no, those storm clouds could be a hurricane. And so I'm saying this stuff I'm talking about still could be, it could be nothing, it could be bad. And I think we should understand that. I'm not predicting one or the other. I'm simply saying be a little prepared for both of them.
When we spoke a couple of years ago, you said that you had not seen the kind of pressure on people, on talent, on wages that you were seeing in your entire career. Yeah. So where are we in terms of wages and inflation? Has inflation peaked at JPM?
I'm not sure wage inflation is going to peak the way people expect it to do. And you got to look at it, take a step back here a little bit. The lower paid Americans are getting wages higher than the rate of inflation. And I don't think in total that's a bad thing. That's a good thing. They haven't had a pay raise for 20 years. The fiscal stimulus was so large and still largely unspent. Whether 5% interest rates are enough to slow inflation to where it needs to be, I don't know. So I talk about one of those uncertainties out there. Is it 5%? And my view is it may very well be 6.
The Fed has been very clear. They're going to continue to try to stomp out inflation by raising interest rates. And so we see rates going higher on all sorts of things. You don't see any rate increases on my deposit account. Yeah. So, how long are you going to be able to capture that, loan growth and raise the interest rates higher elsewhere, but not raising them in the deposit accounts? Is there any reason that you would raise rates in your deposit account?
Americans moved $1.5 trillion into T-bills and a lot into money market funds. So you have a choice. You're not being locked into that savings account. But I do think you see competition. For a while, banks were kind of flush with deposits, and now that's not true for every bank. So you're starting to see banks raise rates. As they do that, other banks are going to do it. So I would expect sometime in the next 6 months, you're going to see savings rates go up and maybe some more competitive deposit-type products.
Do you support the Fed slowing down the pace of rate hikes at this point?
Yeah, I think this rate hike was the fastest we've ever seen. Now it's off at 0, so I'm not sure I'd even include the first 1%. And what the world expects is 5%, and they'll take a pause. They should. So I think, we were a little slow getting going. It caught up. I don't think there's any harm done by waiting 3 to 6 months to see what the full effect of this is around the world. I'm on the side where it may not be enough.
Jamie, I read your recent op-ed. I have it here. The West needs America's leadership. I enjoyed it. As expected, you talked about the regulatory environment, but you also talked about increasing military spending, getting back to focusing on economic growth, develop a Marshall Plan for the energy industry and food security, restructure global trade, deal with China thoughtfully and without fear. So if I didn't know you for so long, I would think that maybe you're running for something with this op-ed. Are you looking to run for public office?
First of all, I wrote that because I think we need all those things for another century of American leadership. And I also make the point that America has to lead for Americans. If we get these things wrong, particularly growth and global diplomacy, et cetera, it would be bad for all American citizens. So no, I'm not running for president. I just think it's important we support rational and comprehensive policies.
Let me get your take on some of the policies out of this administration, and that is ESG. And that is this pressure that the financial services companies have been put under to stop lending to fossil fuel companies. You were asked about it. You were questioned on it during your testimony by the House Financial Services Committee. Here's what you said.
Please answer with a simple yes or no. Does your bank have a policy against funding new oil and gas products? Mr. Dimon.
Absolutely not, and that would be the road to hell for America.
What did you mean?
I believe we should be doing things about climate CO2, but it's not a simple thing like just stop financing them. So if I can stop financing a good oil company, That isn't going to help. What we need is pipelines, permits. So we can't even get the permits to build solar. We need to get a pipeline to get gas down to Louisiana so they can ship it to help our allies in Europe. So we need very comprehensive policy, and I don't think we have that right yet.
And what's the risk of this expanding into something else? Don't lend to gun manufacturers, don't lend to conservatives, don't lend to machine tool companies that make things for drillers.
We're getting this now from 20 or 30 states, and it's hard for any business when you have to deal with different rules and regulations in states. And some of the states, may have legitimate complaints about some of the banks, et cetera. Certainly not us. We just deal with one by one, and I'm not going to get frenetic over it. You call me up, you got a good issue, I'll look at it, we'll respond. We do what's right for our company, our clients, and our country. So
you're not going to shut down lending to these companies that may not be in the narrative of the Democrat Party?
I'm not going to stop lending to anyone that's in the narrative of any party. We will decide for ourselves what the risk is, whether they want to do it or make sense. And it may not always be that you agree with it or the Republicans agree with it or the Democrats agree with it. But that's what a democracy is, by the way.